This is Alan Bush with ADMIS with the Daily Financial Forecast for Tuesday, May 17th. Stock index futures under a little pressure today. I think much of this linked to the housing starts and permits numbers that on balance came in maybe a little bit weaker than expected. Of those two numbers, it's the permits that are more important because permits are a reflection of the future. Starts is more of a reflection of the past. Only a bit of a bounce with the 8/15 capacity utilization and industrial production reports coming in better than expected. But with the pressure today, I guess this would probably be not that surprising after such strong gains yesterday. So a little profit taking coming in today. Also, I'm inclined to think that we will see some recovery later this afternoon. Still thinking the main trend is higher for all of the major indices. Now, moving over to the currencies, we are seeing the pound trading higher. This after a newly released poll indicating that the stay vote for the UK to stay in the European Union may have gained some traction. Of course, it was just yesterday that we had a poll that showed just the opposite. So in any event, the pound a little bit better with those polls showing the stay vote looking a little more promising. Also the pound higher, even though we did have inflation numbers in the UK coming in less than expected, meaning that the UK is not in a position to raise interest rates anytime soon, and a rate increase from the Bank of England would be supportive to the pound, but there is very little chance of any rate increase this year, probably not even next year from the Bank of England. So the pound, even though it's higher today, I think is likely to work lower longer term. Also, we are seeing the Australian dollar trading a little bit better this after monetary officials in Australia indicating that they are unlikely to lower interest rates further anytime soon. Now moving over to the interest rate futures markets, we are seeing the front end futures a little bit lower, the bonds a little bit higher. Not a lot of volume with what we're seeing. Also the probability of a rate increase at the June meeting now still at only 4%, even though at least 6 Fed officials over the last 2 weeks had some very hawkish comments, several of them even suggesting that the Fed could raise rates at the June meeting. Our feeling is that they will not be in a position to raise rates. Economic numbers here have not been that good, and the rhetoric from the Fed about being more hawkish, I believe, is nothing more than a dollar support initiative. Also, the probability of a rate increase at the December meeting now just at 59%, the same as yesterday. And I would not be surprised to see no rate increase this year from the Fed. Now, moving over to the precious metals, I think there is a lot going on there. I think we are likely to see higher prices near term and longer term as well. The fundamentals and the technical aspects of gold and silver remain very bullish. And I think we can see higher prices today, higher prices longer term. So this, I think, is an area where you should be focusing on. Trade the gold and silver from the long side on breaks. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.